Hi everyone, and welcome back to our monthly market updates. I am excited to dive into July. I'm a little biased because it's also my birthday month, but hello summer, hello changing markets. Let's talk about it. If this is your first time tuning in for a market update, hi, I'm Lolo Fisher. I am your dedicated realtor here in Santa Clara County, really working to keep you informed on all the latest trends and insights in the Bay Area real estate market. So we're going to go over the market metrics based on May and June 2024. We're going to dive into some of the hot topics we've been seeing in the news related to real estate. And then I'm going to finish off by giving you some programs if you are on the buyer's side that you might be interested in checking out. So let's hop into it. Let's get started with a brief overview of the market conditions. As I pull up my numbers here, I always like to look about 2 months back so that we can see what might just be surprise in the moment, something weird happened versus what's actually a trend or statistically proven that something's going on. So diving into those key statistics and trends, May 2024, our list to sold price in the county was 107.7%. Just to translate that, if you're not familiar with the real estate terms, that essentially means once you put your home on the market, how much does it sell for? If you get exactly what you're asking for, that's 100%. 107.7% tells us that we are still appreciating in value. We are still a competitive market, and the dynamics of that mean that we're typically going to send at or above asking price. That's not always going to happen, selling at or above asking price, and it really depends on the home. That's why it's important to be assessed by a professional realtor who can help you determine that pricing strategy. But that's a really good trend to see in the market, to know that we're always still dynamic and competitive here. What does that look like into June? It did drop a bit, but just a bit. 106.2% was the list to sold price average within our county this past month in June. And I'm recording this on July 2nd, just for context. So that gives you some insight as to how we're moving into the rest of the summer. Now, what I will say is in May, we had an average of 14 days on market. And in June, we had an average of 16 days on market. From an experiential standpoint, this is not surprising to me, but I'm definitely feeling a difference with how many open houses I've been hosting and what the turnout has been. So buyers that are out there are still serious buyers. Inventory is still considered low in our area, so houses are going to sell. But the time is starting to extend more and more than what we're typically used to in the Bay Area, especially post-pandemic. We've seen things kind of flip really quickly, and there's so many offers, and you're just trying to beat the offer. We're in this kind of lull for a moment, and I'm going to say for a moment. That's important to note because I don't think it's going to last, just based on trends, insights, and what history has shown us, that if you are a serious buyer right now, you have a much higher chance of getting what you want if you are bidding at or above the listing price. So the days on market may be stretching, but things are still selling. So if you're a seller, just be conscious of this, that they're lasting a little bit longer. I hosted somewhere between 8 to 10 open houses this past month. And just in terms of flow, how many visitors, how many groups we're seeing walk through open houses, it was significantly less than typical and than what we were expecting for some of the best priced homes in some of the most highly desired areas. We were seeing trickles of people compared to floods of people like we'd expect. So just note that things may be taking a little longer than desired or than you'd expect, but that doesn't mean it's not going to sell. That doesn't mean your pricing strategy is wrong. That's just kind of what's happening in the market right now. And I've had a lot of people ask me, is this because of interest rates being so high? People are scared. Yes, that's a factor within it. But what I'm hearing far more from one of the clients I actually just helped to buy their house actually, and from other people who are searching and did enter the open houses, is there's a little bit of fear and uncertainty about career stability lately, especially in our Silicon Valley area with just what's changing between tech companies. We've seen a number of layoffs in the past couple of years, and there's been a lot of rumors of layoffs in some of our big startups and tech companies out here as well. While there's no way to guarantee, am I going to have my job for 25 years or do I have it for 6 more months? that is something that's lingering on people's minds is, do I actually want to sign on to a 15-year, a 30-year mortgage? Do I want to add a liability to my name if I'm not positive that I'm going to have the same income flowing in for the next 5, 10, 15, 30 years? So that's definitely one of the topics that I'm hearing a lot about is, okay, if the prices are higher, homes are appreciating, there's still so much value in home ownership. It's just, is it the right time for me and my family, particularly with my job stability, career stability, things like that? So I could rant on, but that's just something to be conscious of. That being said, let's go ahead and jump into some of the hot topics we've been hearing in the news. Some funny, some questionable, but let's figure out what's going on. Okay, so listen to this. I'm going to read directly from this article from the Orange County Register. It says, China-based ZNL Properties has filed a lawsuit against winning bidders in an auction last week of the downtown San Jose condos, as well as the trustee that conducted the proceeding, Santa Clara County Court records show. So what are we talking about? What happened? If you've heard of 188 West St. James, it is a luxury high-rise condo. And in April, there were multiple units auctioned off for an average of like $31,000, $32,000. Don't quote me exactly, but it's in that range. Around $31,000, when these units really go for fair market value of $1 million upward. So how did these people get a unit that's worth $1 million or more for like $31,000? And why are they being sued now? It essentially goes back to the developer and then also kind of who they're saying in partnership with, Nationwide Reconveyance, to say that, okay, there were people who purchased these properties in a sense, but it doesn't rightfully belong to them, because the real issue for how much it costs had to do with homeowners association dues not being paid. If there are units not being owned or rented out and they're just sitting there empty in the building, somebody is still responsible for making sure the amenities and the utilities are being paid so that, you know, at the end of the day, everything can still flow in the building and it doesn't end up going bankrupt, blah, 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 like we've seen a lot of other downtown buildings in San Jose do. And I won't even say San Jose, across the Bay Area, this has happened with a lot of commercial buildings and larger luxury structures that have units not being lived in. So who has to pay for the homeowners association dues if somebody's not living there, if somebody didn't purchase the condo? Well, that goes back to the developer, and if they have partnerships with companies, then they're responsible for that. And that's what happened here. So, you know, there's multiple people being sued in this case because they don't feel the auction should have happened in the first place, and that whatever was going on with the dues not being paid, it should have been handled a different way. But now it's just kind of crazy to see if these folks end up getting it, the ones who auctioned for these buildings and paid $30,000 to $32,000, they just had a huge steal, a huge win. At least that's the perspective from the buyer's standpoint and from the market standpoint. But if it comes with some lawsuits and a bunch of politics, maybe not, because now they have to deal with this in their day-to-day and figuring out what this lawsuit looks like. So we'll kind of stay abreast of this or stay updated to see what goes on. But this 2-tower complex on West St. James has about, I want to say the owners have 90 days to regain ownership of the units that were sold. And this started in April. So we should be hearing kind of the news right about now to see what ended up happening, but they haven't totally announced it. So that's kind of been in the flow of conversation lately. The next hot topic, wait for this headline, 384 square foot home sells for over its $1.7 million asking price. Did you hear me? 384 384 square feet is pretty darn small, and it sold for over its $1.7 million asking price. Where could this be happening? I don't think you're going to be surprised once you say that. Cupertino. Cupertino. So what's actually happening here? Essentially, it was a tiny home in Cupertino. It hit the market in early April, and there was a lot of shock around the size and the price point and feeling like it didn't match. But then also there's a huge demand in Cupertino, and homes sell so quickly and so competitively there that it wasn't totally a surprise to folks who live around that area or to realtors doing the work there. So what's the explanation of what seems to be a disproportionate price? The house is just 1 bedroom, 1 bathroom. So the price that we're looking at is not really about the house itself. It's about the lot and it's about the location. That's really what says it all. So it's on a 7,840 square foot lot, and it's in a super desirable cul-de-sac within Cupertino, which is known for having some of the best school districts. I lived in Cupertino when I first moved to the Bay Area, so I really enjoyed the suburban feel and being so close to the base of downtown, like within 15 to 20 minutes away, without feeling like I had to live downtown itself. That was a great moment for me and my family. But there's different reasons people move to Cupertino. Huge tech world, obviously. I always like to say it seems like Apple runs Cupertino, but that initial shock factor is just like, how does a 300 something square foot home sell for that much? But what's sold for that much is the lot and the location. It is still extremely competitive market in Cupertino. People want to live there. People want to get into that school district. So if you're someone interested in Cupertino, this actually could be something to pay attention to. You don't have to look for the $4 million, $5 million homes that are there. You could look for the lots and the lands that might have these small homes that need to be either knocked down, completely renovated, or added onto. And then you can also make the home your own and put however much money you want to put into building your dream home. So I'm sure whoever bought this property, my best guess would be that 1 bedroom, 1 bathroom tiny home is going to be revamped into a much bigger home and use the space that lot is providing. So that's our second hot topic. Let's jump to our last one. Definitely one I've been asked about probably the most this past month. Okay, so this headline reads, "The viral 488,000 San Francisco home has a buyer." And the deal exposes a dramatic backstory. Okay, so I like this article in particular because it actually explains some of the details rather than it just kind of being an aloofness that doesn't go into like the whys. So this one's from SF Chronicle, and we've seen the headlines a lot. Like, okay, there's this 3-bedroom single family home on Russian Hill in San Francisco, and it hit the market early June. So this was just this past month, and everybody was like, how is this home selling for $488,000? That just does not make sense. You've heard me talk about our average list to sold price percentages, and our median sold price in general let me just double check. In May, for example, was $1,695,000. So $488,000 is tiny. And obviously this is my Silicon Valley, Santa Clara County statistics, but we're not that far off when looking at San Francisco as well. So what's the catch? $488,000 for a 3-bedroom property in a desirable neighborhood? Well, it has a tenant living in it. And it's not just like, oh, well, just evict the tenant. No, that tenant has a lease, a contract that runs until 2053, and they're paying just $417 a month. So it just sounded crazy, honestly. Like, what is happening? How is this being sold? Well, it did have a buyer, but now something's a little funky with that. The buyer, the offer that was accepted, came from inside the house. So if you go into the Chronicle's article, it goes into more details about the trustee being not the beneficiary of the home, and who's selling it, who's living there currently, its family, its relatives, blah, blah, blah. To make it short, essentially, the seller accepted an offer from his own sister, who is a granddaughter of the home's owners, I should say former owners, and that granddaughter lives in it currently. So she is one of the tenants. She put out the offer for $488,000. The house did have multiple offers, but clearly they were trying to kind of keep it in the family. So there's definitely something weird about it with it being a trustee sale. And then the person who got it is not actually a beneficiary, but they're still family. So the house didn't get directly passed to them or directly signed off to them. But through a way, they found a way to still keep it within the family. So there's still some like weird things going on as they figure this out. But it drew a lot of attention just seeing pretty much any home in San Francisco that's 3 bedrooms going for $488,000. So when we see these crazy stories or these big headlines, it's not always something to be like, oh my gosh, there's this like home, I have to get it. It's like super cheap. They must have made a mistake. Let's do it. Let's look into it first, because sometimes there's an opportunity, and then other times there's some fishy things going on, or some backstories, I should say, that we don't always know about, that we got to do our research and figure out. So that's what a real estate agent is for, though. We're gonna be your investigators. We're gonna be your party planners. We're gonna be your action planners. We're gonna actually take all the steps and be your marketing specialists if you're listing a home. We're gonna be your emotional support through the process, because buying and selling a home can feel like a lot sometimes. And if you're the type of person who's like, you know what, you just handle it, tap out, then we'll be your everything. I joke, but I'm also serious. Okay, so finally, let's talk about some of the programs that are available if you are an active buyer or planning to buy within this year or two. The programs are constantly changing, so this is something that is going to be most relevant for the people actively on the market now. I went to a workshop recently that was all about trusts and probate, and we actually talked about how expensive probate can be. If you have questions on this or want to talk about purchasing a home through a trust, when to buy a home from a trustee, things like that, I'm happy to talk more. But that's not actually my point here. It was hosted by Bank of America, so they were also sharing a little bit more about 2 of their existing programs they have right now. They're grant programs, which is pretty awesome. It's not just about the loan side where you have to pay the money back, but grant programs are giving you that money and saying you don't have to pay whatever this designated amount is back if you participate in our program. Sometimes they have a little bit higher rates when it comes to your actual monthly mortgage payment, so you definitely want to check on that to figure out if it's the best match for you or not. But listen to these details a little bit. The America's Home Grant Program through Bank of America, you can get up to $7,500 in closing cost help. And this is not necessarily just for first-time homebuyers. I think that's also a caveat that people just are like, oh, it's first-time homebuyers only. Maybe I was a co-signer on something, or maybe this is my second home. This is just about you getting qualified and the lender crediting it to you, and it has to go with your income and the location of the home. So that's kind of what it's dependent on, and then a lender can help you actually determine if it's a right fit for you. The other one is their general down payment grant program. So this one would be for closing cost home grant. This new one is up to $10,000 in down payment help through a grant, not specifically towards a loan. And you could receive up to 3% of the purchase price for your primary residence. The maximum is $10,000. So whichever is less, either $10,000 or up to 3% of the purchase price of your home. And those funds can only be used towards the down payment, but that also has to do with qualifying incomes. It doesn't have to do with you just being a first-time homebuyer. So there's lots of first-time homebuyer programs out there. And then if you look at these as well, sometimes you can do both. And that's something you really want to pay attention to is, can I do a first-time homebuyer program that works with a grant program as well, so you can get help doubly. Another thing that got sent to me, and I'm going to pull it up here, is that one of my good friends, a lender that I can easily refer you to if you're interested, does a lot of non-QM lending. So what does that mean? It's essentially lending for self-employed folks, independent contractor clients. So if you're not somebody who is just working that 9 to 5, and getting clear tax documents, and you're like, well, I'm making my own money, I'm an entrepreneur, I'm self-employed, I want to buy a house, I feel like I have enough, but how do I do it if I don't have the records to show it? That's where we get talking here. So they have a P&L program going on right now, meaning as long as you're tracking your profit and loss statements, you can use that as kind of your qualifying documents to get pre-approved, and then to go ahead and move forward. with your self-employed or 1099 documentation. It's just considered alternative documentation. So you would need a credit score starting at 620. The loan amounts could go up to $4 million. And there's different purchase rates, term rates, there's cash out options. And this is the loan side. This isn't the grant side necessarily. So please make sure you note that difference. But if you are somebody who's looking to buy right now and you are, not sure if your income qualifies, these are all things that we can set you up with a lender that's specifically able to help you with your needs, whether that be an institutional bank, whether that be one of our creative lenders, mortgage loan originators who can help you go from the wholesale market. There's always options. That's it for this month's market update. Happy July, friends. I hope you have a great rest of your month ahead. If you have any questions, if you want to discuss your real estate goals more or what's going on in the market and just get some clarity of understanding or build out your action plan, please don't hesitate to reach out. And even more so, if it's not you right now, you're just kind of planning for the future, but you know somebody who is actively planning or looking at it, please send me your referrals. I always appreciate it. And if you know me, you know I will always go out of my way to make sure you have the best experience possible with your home search or home selling process. So with that, happy house hunting, enjoy your summer, and I will see y'all next month for our next monthly market update. Bye.